All right, time now for our triple play. All of us picking a stock in the news and on the move. Josh Schaefer filling in for Rochelle today. My play is Netflix, the streamer, suing the team behind the Unofficial Bridgerton Musical for infringement. Abigail Barlow and Emily Baer put on a for-profit, sold-out show Friday at the Kennedy Center with ticket prices up to $150 without Netflix permission. The Grammy-winning duo even promoted branded merchandise, and they have plans for a future performance in London. Barlow and Baer gained fame for their Bridgerton-themed TikToks and even beat out Andrew Lloyd Webber for Best Musical-Themed Album. In a statement, Netflix says they support fan-generated content, but Barlow and Baer have taken this many steps further, seeking to create multiple revenue streams for themselves without formal permission to utilize the Bridgerton intellectual property. Wow, that is a stunning case. Netflix shares down more than 60% this year. They are up today, if you will, on this news, 2.5%. Josh, a bit staggering that it got this far.
Dave, what my main takeaway from this is someone else is finding ways to find different revenue streams, perhaps better than Netflix is.
Yeah.
Boom. Why doesn't Netflix have a TikTok where they're creating this kind of content? Why isn't Netflix making musicals? We're talking about a company that wants to bring in ads to get new revenue. Sure, that's a great way to
create events.
That's a great way to get revenue, but why not do something else?
And I'm also surprised that it took this long for Netflix to step in, because we've been talking about for a while now how popular this TikTok musical was.
They won a Grammy.
Netflix was initially supporting it. They won a Grammy. And I'm surprised it actually got to this point. Also surprised, we were talking about it during the break, that the women actually thought that they were going to get away with it. I think that's the whole thing here. Like, why did you not?
How do you win a Grammy and get away with that, right?
Yeah, I don't know. It's a little
Kennedy
surprising.
Center and merchandise.
Yeah.
2 steps too far.
Right. But another company with multiple revenue streams, my play today is MGM Resorts International, and more broadly, the gambling sector. It's gambling earnings week. MGM is set to report its second quarter earnings after the bell, which we'll bring to you live here. But you can see MGM shares up about almost 5% headed into those earnings, as investors anticipate a $3 billion revenue from the casino chain. Now, one thing I'm going to be watching for here, though, guys, is investors, in that investors call, is what they say about digital gaming. Last night, Caesars Entertainment CEO Tom Reeg said his company cut back advertising spend by hundreds of millions of dollars. Now, you can see shares were up slightly for Caesars, but really what stuck out to me about that is he reiterated the profitability goal by the end of 2023. He said they're now really feeling confident in that. We always talk about these sports gambling companies and how much they spend on advertising. Caesars cutting back significantly, keeping a fair amount of market share too. If that's sticky, then maybe we finally see one of these companies turn a profit, Shauna?
Yeah, it's going to be interesting. I mean, the analysts were pretty positive on the results that we did get from Caesars. Jeffrey specifically talked about that pullback in digital spend in their note that was out this morning, saying that that should be a positive for the company. So it looks like at least the street analysts think that these companies are moving in the right direction. A couple of price target hikes here from Barclays, Truist, JP Morgan, just to name a few, hiking their price targets on Caesars. Be interesting, though, to see what we get out from MGM after the bell today.
I'm watching this space well beyond this year into next year, because it looks like FanDuel and DraftKings both get into the television market. 24 hours. That's going to be a huge evolution, maybe not dramatic impact on the shares, but certainly a game changer in the industry.
Yeah, it certainly will be. All right, well, my play today is CVS, raising its full year forecast after topping second quarter expectations. Results driven by an 8% jump in same-store sales. In a note this morning, JP Morgan wrote that sales were boosted by a jump in prescription sales and demand for COVID-19 tests, as well as a longer cold and flu season relative to what we saw last year. More people are also shopping in CVS stores. They saw an increase in number of trips and also in the number of products that people were buying in the store during the quarter. You can see shares moving to the upside today, and one of the big gainers in today's market action, Dave.
What I'm really watching there is them entering or wanting to enter the primary care space, which quite frankly, anyone who knows has tried to see a primary care doctor is a debacle out there in this country. Them entering the space would really change things. Now, they don't have doctor's offices. It's either going to require a purchase or a merger, but they want to offer doctor's appointments 6 a.m. to 9 p.m. on weekends, and the availability could really help this country.